Hello everybody, welcome to another update on the stock screener. Today we're going to talk about Galane Gold. So you can see here that the stock has actually gone down, probably because of the gold price. But I think this is a massive buying opportunity. A massive buying opportunity. And I'm not going to sell any of my shares, and I'm going to tell you why. So the latest news is that Galane Gold has commenced stopping, and I'm going to tell you what this means. And they say that they will see an increase in tonnage delivered to the plant. And they're going to go to 26,000 ounces per annum by the end of this year. And then by next year, it will go to 40,000 per annum. And they exceeded production in the second quarter, 2,500 ounces of gold. So that's about 10,000 per year. So keep that in mind. They are now producing 10,000 ounces of gold per year from Galaxy. Also, no problems with the unrest in South Africa, very important, because people have been saying that there are problems in South Africa. There are no effects here. There was some bad news on Mopane because of lower production. So that's poor performance, but I think it can improve in the next quarters. You can see here that the second quarter was actually better than the first quarter. So it was an improvement. But you can see that this is not the 30,000 ounces per year that they forecast, but it's around 25,000. So, yeah, they need to do better here. But I think it will improve. You can see here there are some problems at the operations there. But we should focus on Galaxy right now and see what is happening there. They also had an update on Summit. Apparently, they can get it in production much faster. We will see. I can't say anything more than that on Summit. So let's take a look at the numbers now. So Galane Gold is trading at 36 million, completely undervalued, because they have around 3 million ounces. If you do this times 30, that's 90 million in value. And that's not even including Summit, which is also worth 10 to 20 million and probably 50 million when it gets into production. So this thing can easily double from here, just based on the amount of ounces that they have. Price to book value is almost at book value, 1.5. So that's very cheap. PE of 7, which is going to go to PE of 3 and even lower. So I wouldn't worry about these numbers. This is a really cheap company. Even my valuation here tells us we can go from the 36 million up to 100 million. So this is a double, a triple, and in the long run, quintuple. So let's take a look at the numbers. I have calculated the gold production numbers from last year until this year. And as you can see, this is Mopane. They are around the 7,000 level, which is 28,000. And you can see that the performance is not that good in the last 2 quarters. So it's below the 7,000 average, and this should go back up. Let's see if they can manage to do that. But focus on this line here. This is Galaxy. And you can see that it has risen from 1,000 to 2,500. So that's 10,000 per year. And this is a very big increase. And I expect that this will continue to increase to, let's say, I think that this can increase to 5,000 in the coming quarters. So this is going to rise almost at the level of Mopani. And this is, of course, only phase 1. Next year, we are going to phase 2, which will double again the production. As you can see here, this is Mopani expected. And we are now here at the 10,000 level, right? And this will increase to this is Galaxy. This will increase to 26,000 by the end of this year. And it will go to 43,000 by the end of next year. So in total, we will have 70,000 ounces of gold in 2023. And it is going to go much higher if Summit comes online at that time. So we will reach 100,000 and probably stay at this level as they find more resources. Okay. Now let's talk about this stoping news, because this is very important to know. What is stoping? So there are different kinds of stoping. I have put them all here, which they can use at Galaxy. So the first one is a cut and fill stoping. And you can see here, these are the ore bodies. And stoping is actually just mining out these ore bodies. That's stoping. So they have these rises here, these channels here, where they can mine out the ore and then throw it in these bins. And they are going to remove these ores here and haul it back up to the plant. That's cut and fill. So they cut it and then they fill it with waste to support the ore body. This is done with vertical stopes, high grade and irregular ore bodies, and they use horizontal slices to slice it out and cut it and fill it. So this is another schematic here. These are the spirals. This is the stope. They are going to drill it out, load it, and then they put it in the plant. Same here. They start at the bottom and they stope upwards. So they drill it out upwards and fill the waste here so that can provide support. Okay, that's the first way of stoping. We have also long hole stoping, which is more mechanized, also from bottom to up. They use a lot of machinery, load haul dump machinery, use explosives as well. And this is actually the most productive one because they use a lot of machinery. That's long hole stoping, actually very similar, but this is a very productive way of doing this because you use a lot of machinery. Then they have shrinkage stopping, which is done with narrow veins. And actually they just drill out everything. This is blasted ore, and they just leave it there to support the walls. So the walls are supported in these narrow veins, also bottom up, and then they load it on these trains and get it out. So that's another way of stopping. And then we have underhand mining, where they stop it like this and throw it again in this race. and haul it out. So why am I telling this? Because all that Galane has done up until now is doing this. They are developing these ramps, these access ramps, and that costs money, right? They're doing this development, but from now on, they are going to stop. So this is important. This is not development anymore. This is stopping, which is actually getting out the ore into the plant. So now they are actually producing instead of developing. So this is Galaxy, this is Princeton, this is Woodbine and Giles. As you can see on my map, this is Princeton, this is Woodbines and Giles, Galaxy. So they are mining these ore bodies now. And to illustrate also the costs, okay, so this was phase one, how they are doing this. This is development, and then they are mining. So you can see a market increase in the amount of ounces recovered. This was phase one. We are now in this study now. And as you can see here, this is 1,000 times per monthly, so that's 12,000. We are now at this stage, 12,000. As you recalled, we had 10,000 ounces of gold. Now we are going to increase to about 2,800. So that's 26,000 ounces. And as I told you, that's this 26,000 ounces. This 26,000 ounces, that's this number here. We are now going to go into the next phase. This phase. Much higher production, which means we are going from here to here. And when you look at the AISC, we are going from 1,400 AISC to 1,000 AISC. So less development costs, less costs, and more production, more production. Very important because now Galane will make a lot of money at lower costs. And next year, this is going to improve from 1,000 to a cost of 800 per ounce. And production will go even higher. And that's this increase. So in about 1 year time, you will go to this phase at a cost of 800. This is what we are waiting for, okay? We are going to wait 1 year to get to this phase, and then we are going to make lots of money. Because now the development phase is over, and we are starting with stoping. Of course, they still need to develop this here, but the capital costs will be lower per ounce, and production will be higher. So now the cash flow is going to start coming in. Let's take a look at that cash flow. Where is my revenue chart? Where is it? Here is it. So we see that equity has gone up. Revenue went down a bit due to lower production at Mopani. But now we are going to see an increase in gold from Galaxy, which is this increase, right? The total production will be almost at the same time as Q4 2020, even higher, and is going to go much higher. So we should have a revenue higher than Q4 2020. So we should see this thing here go back to here, but a little bit higher. So operating profit should also be higher. And net earnings were negative in March, but this will probably be around 2 million, I think. And of course, going much higher in the next quarters. So that's 2 million. So the PE, I have taken 5. And the PE is around 6, 7. But of course, it's going to go much lower in the next quarters. So this is where we stand. This is a massive buying opportunity as we go from high cost developing to stopping, and the costs will only go down now and production will go up. Also very important, gold is now at 1,800. There's plenty of margin here at Galaxy. So they're going to make lots of money. I wouldn't even care about the earnings. This is going to be a cash flow cow, and we're going to stay in our trade, buy more, and wait for the rebound. And I'll see you in the next video.